Well, welcome to the next video in the Crypto Trading Mastery Training. In this video, we'll cover volume basics. This will be an introduction to volume. The majority of the stuff that we will cover around volume will be in charts. But there's some initial concepts that we'll cover here in this video that you'll want to keep in mind as we move forward. So first up, I'll mention, as I typically do, that I am not a financial advisor. Anything I say about trading, cryptocurrencies, money, life, or anything in general should not be taken as financial advice. This is all my own opinion, and I am not a financial advisor. So let's jump right in. So the first part is, what is volume? And I'm sure most that are watching this right now, you know what volume is. But in its most simplistic form, volume is the number of shares, whatever you're looking at, traded during a specific time frame. So if you're looking at 1 minute charts, the volume represents the amount of shares traded on that 1 minute time frame. If you're looking at a day, it's the amount of day. And you could be looking at this in a graphic representation, or you could be looking at this in a numerical representation, right? Now, volume is very important because it shows interest, it shows activity, and volume is a representation of supply and demand. At its core, any market really is a balancing act between supply and demand. It's a little bit more complicated than that, but that's some of the best ways to look at it. Now, there's something with volume, and if you are able to read volume correctly, you're basically giving yourself a trading superpower. And you'll see here as we move forward here in just this introduction here why that's such a critical thing. A lot of times there's people talking about these charting patterns and these indicators and everything else. The true secret is being able to identify the price action that the bars actually represent, and then understanding whether or not the volume is real to back up that price action. We'll cover this in a lot more detail, but the true power here is that if you really understand the volume and how to read volume, you're going to have a true edge over a lot of other traders in the market. You know something, it's not just me that says this. I don't know if you've heard of Charles Dow. I'm sure you've heard of the Dow Jones Industrial Average, right? The Dow Jones. You watch any financial channel, you're going to probably hear it every 5 to 10 minutes. Maybe not that much. But this was something that was created by Charles Dow and his partner, Edward Jones. And they were financial reporters. It was first published in 1896. And it was average market price of 12 companies, okay? And so that's what the Dow Jones, it's different now, obviously, but that's where it started, okay? And one of the things about Charles Dow is that he's really known as the grandfather of technical analysis. Any trader, Wall Street traders, anybody else, there's concepts that he's developed or that he's refined that are baked into just about anything in trading these days, without even knowing it, without even referencing it, without even having a name like Dow attached to it. It's just he was that much of a groundbreaking trader that his concepts, his ideas are still used today. And I'm sure you'll recognize some of this as we kind of move forward here. Now, one of the things he said is that his principal belief, or one of his principal belief, was that volume confirms trends in price. And we'll cover this in a lot more detail here as we move forward. But he said that if price was moving on low volume, there could be many different reasons for that. So if you see price movement on low volume relative to what you're looking at, it doesn't confirm anything. And that's what he said. He said, however, if price was moving on high or rising volume, then it's a valid move, and price continuing to move in that direction with supporting volume was the signal of a start of a trend. And being able to recognize a real trend, it doesn't matter what time frame you're trading in. It doesn't matter if you're doing a quick scalp, if you're doing a long-term trade, if you're doing something to hold for years. Being able to recognize if there's a trend, if there's a reversal of a trend, is so critical in trading. And Dow really recognized that the volume aspect of trading can give you so much insight into that. Now, the other thing that he's kind of known for, I mean, he's known for a lot, but he really popularized the smart money, dumb money concept. There was a lot of talk about it, but he really talked about how the smart money is buying really low. And then at the time, it was radio and newspapers, and they were using mass media to get people all excited about stocks and get people excited about buying things. And the dumb money was buying where the smart money was selling, right? So he was looking to educate the quote-unquote retail investor, but he also understood how the markets worked at a very core level. And what he's really saying in a lot of his volume talk, or how he talks about volume, is that volume, or the effort of volume, needs to match the result. So imagine that you want to move a big boulder, okay? You're on a flat landscape and you want to move a big boulder. If you put a lot of effort into moving that big boulder, it's going to move a long distance, right? If you put just a little bit of effort, it's not going to move as far. This is the way that you should start thinking about volume, is that volume should match the effort, or the effort of the volume should match what you see in the price action. This is so critical. Now, most people, they kind of get this on the upside. They understand that, okay, when volume is rising and the price is rising, that makes sense. But the other important thing to realize is that this matters on a downtrend as well, is that volume should match the price action on a downtrend. So the uptrend, oftentimes investors get trapped for not reading volume correctly, but you can get trapped on a downtrend as well. And you need to be able to read volume in both aspects, because the effort of the volume should match both on an uptrend and a downtrend. Doesn't matter what move, if it's a 1 minute move, a 5 minute move, a 15 minute, or a day move. That volume on both the up and down side should match the price action that you see. We'll get into this a lot more detail, but this is something to really just keep in mind. Another way to think about this is think about a ship in the ocean, okay? And a ship at the sea, a large wave is going to have a big effect, right? Well, a small wave, you're not even going to be able to tell if it even hit the ship, right? This is the way volume works, is that it's like the waves. So a big wave of volume, your expectation is that you would see a big effect on the ship. A little wave of volume, just think of it this way actually too. Imagine there is just a little wave, barely you could see the wave, and it hit a ship, but that ship just rocked really violently. Wouldn't you, if you were standing on the dock and kind of saw that out there, wouldn't you think, well, that's odd, right? It's the same way with volume. So when you see just a little bit of volume, but a huge reaction, you should say, well, that's odd. The same way you would if you were watching a ship from the land. Another concept, and we're going to get all scientific here for about, I don't know, a minute, which is Newton's third law of physics. And Newton's third law of physics says that every action must have an equal or opposite reaction, right? That's about as far as we're going to get into the actual physics of it. But that's the other way to think about volume, is that the volume that you see, the action of the volume should have an equal reaction. And the way to look at this with charts, okay, is that it should be symbiotic. Is that, and I hesitate that it should match, because as with anything else in trading, it's more an art than a science. But you should be focused on always saying, does that wave of volume, does it match the price action on this asset? Okay? Because this is specific to the asset that you're looking at. It's specific to the market you're in. It's specific to the time frame. It's really specific. So you just want to make sure that the volume that you see is in harmony with the price action. Another person that really, I'd say that I'd point to that started me on this path, that helped me understand this, that I wish more people knew about, was Richard Ney. Very interesting character. But Richard Ney, he wrote this book in the 70s called The Wall Street Jungle. And he was a renowned investor. I mean, he was more than that. He was an investor, trader, Hollywood, and stuff like that. But what he did with these books, these series of books, is he revealed how markets, all markets, are basically manipulated on an insider level. Just about every aspect of it is manipulated by insiders. And if you can find this book and the books that he wrote, it's still relevant to today. It's been proven time and time again. Every time a little bit of news kind of comes out that, hey, there's some kind of market manipulation, I can go to a page in his book and I can say, yeah, he talked about that. And yep, 40 years later, or whatever it is right now, 50 years later, it's still relevant, right? But there's one thing that he shares in his book that should be just a light, a sun that just will not go away. And in his book, The Wall Street Jungle, he says something that just hit me like a lightning bolt. And I'll quote exactly almost. However, there is one activity that the insiders cannot hide, and that is volume. Volume reveals activity. Volume reveals the truth behind price action. Volume validates price. Now, when I read that, I kind of glanced over it, and then I like to highlight books that I read and stuff like that. But I highlighted this portion. And as I started thinking about it more and more and learning more and more about trading and getting more experience, this is like gold right here. Because everything I've covered so far really supports this, but once you start seeing this in the charts and once you start understanding this, it will, like I said, it's like a superpower. And that's the thing, I've said this a couple times, you've probably heard me say this, is that volume is the one thing that doesn't lie on a chart. Just about anything on a chart can lie because it can be manipulated in some form or fashion. But volume is a true representation of the activity. You can't, well, here's the thing. You can fake volume because you can do wash trading and everything else. So if you fake volume and you just wash through a volume, you could increase the market cap of an asset. And that happens a lot in markets, okay? But it's real volume. It's not artificial volume. It's not an artificial wall on the books that is creating a psychological barrier for people that's driving the price down. It's not that. It actually is real volume. It actually is real orders that went through. So volume is about the only thing on a chart that does not lie. And I've said this before, but volume is relative to the asset and the time frame you're looking at. And that's something that you'll consistently have to remind yourself on, especially as we move forward, that it's relative, okay? And I've said this many times before, I'm sure, in the training, is that trading is an art. There's science aspects to it, but it's still an art. Even if you were programming a bot to make completely computer-driven decisions, how you program that will still be an art. So volume and reading volume and whether or not it's relative to that asset, even if you use an indicator, you're still using that creative side of your mind, okay? But understanding that it's relative. It's relative to the time frame and it's relative to the asset. And one thing to keep in mind as we move forward here is no movement in price, up or down or even sideways, can be trusted without confirming volume. It's going to be the one thing that you're always going to be doing, and you'll get to a point where you're just going to do it second nature. So it's something like anything else. You just learn it, and it becomes a habit, and you just start to recognize it. So as we move forward here, we'll be pretty much in just charts, but everything I've covered here in this intro and in the intro of candlesticks and everything else, please keep in mind, and I'll be referencing it here as we move forward. But these are concepts that are the foundation of a lot of what we'll cover when we jump over to the charts. And that's what we'll do in the next videos. We'll start jumping over to charts, talking about price action, talking about candles, and talking about volume.